Hello everyone, welcome to EduTap and welcome to the Finance 360 degree session. So today I have brought for you a very important session where we will revise the important facts of the Financial Stability Report June 2024 that has been recently released by the Reserve Bank of India. So let's see that how much you remember from the FSR June 2024, as well as today let's see that what are the most important facts that you must know from the FSR June 2024. So let's start with the revision. Let's start with the important questions from the FSR 2024. But before that, do subscribe to the YouTube channel of EduTap, as well as do join our Telegram channel where you will get the PDF of the session. So the link for the Telegram channel is given in the description box below. So before starting with the first question, if you have not seen the detailed coverage, do see the detailed coverage on the FSR June 2024 so that you have the idea that what is the FSR June 2024 and what data points the FSR June 2024 has provided, and the understanding behind the data points you can get in this session. Okay, so today we are just going to revise the important data points, and today I'm going to test that how much you remember from the FSR June 2024. But I will suggest you that do see this session first. Okay, now starting with the first question, I hope you know the answer of this question. You have to tell me that in the uncertain international economic and financial environment, the Indian economy is exhibiting resilience, and which of the following statements is or are correct in this regards. So India's contribution to global growth is rising and currently stands at 12.5% in 2023-24. So this is wrong, right? It is 18.5%. GDP rose 8.2% in 2023-24, up from the 7.0% in the previous year, despite muted private and government final consumption and external demand conditions acting as a drag. Still, the real GDP increased by 8.2% in 2023-24 in India, from the 7% in the previous year. Okay, the Monetary Policy Committee has projected real GDP to grow by 7.2% during the 2024-25. So this is correct, that yes, MPC, that is the Monetary Policy Committee, has projected the real GDP to grow by 7.2% during 24-25. Okay, so the first and second statements are incorrect, and that's why the real answer is 3 only. That is the correct statement. So here you can see that the India's contribution to the global growth is rising and currently stands at 18.5% in 2023-24. Very important data point. Then the real GDP rose by 8.2% in 2023-24, up from the 7% in the previous year. And the MPC projected real GDP growth by 7.2% during the 2024-25. Okay, now the resilience of the external sector has supported India's overall macroeconomic stability. India's current account deficit moderated to what percentage of GDP during 23-24 from the 2% of the GDP during the previous year. So here the answer is 0.7% of the GDP. So I hope you already know this answer. Very important data point again. So here this is the current account deficit. So the current account deficit, okay, first of all, current account means in the balance of payment there is current account and there is capital account, right? In the current account you have the trade in goods, the trade in services, and the transfer payments. That is the remittances that are coming in from the other countries, from the children that are living abroad. They are sending the money to their parents in India, as well as we are also sending like the parents in India, they are also sending the money abroad to the children. So we are getting the transfer payments, that is the remittances, and we are paying the remittances and such transfer payments. So in the current account there is the deficit of 0.7% of the GDP that has been seen in the 2023-24. This is mainly because of the deficit in the trade in goods. But still the deficit in the trade in goods is less, as well as there is surplus in the trade in services and the transfer payments, due to which the deficit in the current account has decreased from 2% in the 2022-23 to 0.7% in 23-24. So I hope you understand that yes, the trade in goods is still having the deficit, but the deficit has reduced in the trade in goods, and the trade in services and the transfer payments is having the surplus. So the current account is having the deficit, but the deficit is way lesser than the previous year. Okay, so this is the idea. So the moderation in the trade deficit, along with, so merchandise trade deficit narrowed to US dollar $238.3 billion in 2023-24 from the US dollar $264.9 billion in the previous year. So that means the merchandise trade deficit has reduced, has narrowed. Okay, so deficit is happening in the merchandise trade, in the trade in goods, but that has decreased, and trade in services and the transfer payments, they are in the good condition. Okay, so that's why the current account deficit has decreased from 2% of the GDP in the previous year to 0.7% of the GDP during the 23-24. So now coming to the next question, try to answer this question. Read it very carefully and then try to answer this question. Okay. As per the financial stability report, fiscal consolidation the government is doing, that is, the government is trying to reduce its borrowing and the government is trying to reduce its fiscal deficit. Buoyant tax collections are there. Improvement in the quality of spending have been distinguishing feature of the union government's fiscal policy. That is, we are doing the improvement in the quality of spending. That is, we are focusing on the capital expenditure. The government of our country is focusing on the capital expenditure. As per the provisional accounts, the gross fiscal deficit was -% of the GDP in 2023-24. So the gross fiscal deficit, that means the fiscal deficit of the central government, was what percentage of the GDP in 2023-24 as against the budget estimates of 5.9%. So as per the provisional estimate, you have to tell that what is the percentage of GDP, that is the gross fiscal deficit as per the provisional estimates. So it was what percentage? That was 5.6%, while the states combined gross fiscal deficit. So states gross fiscal deficit was what percentage of the GSDP? So it was 3% as per the provisional estimates of 2023-24 as well as the budgeted estimates of 2024-25. Okay, so this is the answer. So here you can see that as per the provisional estimate of 2023-24, the gross fiscal deficit of central government was 5.6% in 2023-24, while for the state government, if we see that the states combined gross fiscal deficit as the GSDP ratio for 2024-25 is budgeted at 3%. It is the budget estimate, unchanged from the level of 3% in the 2023-24 as per the provisional estimate. So there are some additional data that you can see, but the most important data is the data for the gross fiscal deficit. Okay, this data is also important, that the capital expenditure, the government of our country is focusing on the capital expenditure. Okay, now focusing on the next question, try to answer this question. As per the data released in the FSR June 2024 edition, which of the following statements is or are incorrect in regard to the scheduled commercial bank? So for the scheduled commercial bank, you must be aware about all the important data points: CRAR, CET1, the GNPA ratio, the NNPA ratio. So GNPA ratio has come to a 12-year low at 2.8% in March 2024, absolutely correct. Their NNPA ratio improved to a record low of 0.6% at March 2024, absolutely correct. Profit after tax has increased by 32.5% in March 2024. So it is not 12.5%, it is 32.5%. Okay, so this is actually wrong. The return on asset has remained strong at 1.3% and return on equity has remained strong at 13.8%. The deposit growth has been 13.5% for March 2024, that is from the 2023-24, while the net of merger, the deposit growth was 13.2%. Yes, net of merger, the deposit growth was 13.2%. So all the other statements are correct, only the C statement is incorrect. That is what you had to find. Okay, so here return on equity, you can see it is 13.8%. Return on asset is 1.3% as on March 2024. The deposit growth was 13.5% as on for March 2024, and net of merger deposit growth was 13.2% for the March 2024. The credit growth was 19.2% for the March 2024 for the scheduled commercial bank. The GNPA ratio was 2.8% as on March 2024, and the NNPA ratio was 0.6% as for March 2024. Okay, so now coming to the next question, that is recently the RBI has released its half-yearly publication, that is the Financial Stability Report. June 2024 has been released by the Reserve Bank of India. The CRAR and the CET1 ratio of the scheduled commercial banks stood at what percentage each at end of March 2024? That you have to tell me. Okay, so for the CRAR was 16.8% and the CET1 was 13.9%, right, for the scheduled commercial bank. So the right answer is C here, that is CRAR was 16.8%, the CET1 was 13.9% at the end of March 2024. Okay, so all these data points are very important in regards to the scheduled commercial bank. The provisioning coverage ratio is very important, that is 76.4%. Provisioning coverage ratio means that out of your gross non-performing assets, how much provisions the bank has. So if the gross non-performing asset is 100, the provisions that the bank has, that the scheduled commercial bank has, is 76.4. So that is good. Okay, so this is what we have seen. Now coming to the macro stress test were conducted under the FSR. So as per the macro stress test, there were three conditions that were seen, that in the baseline situation, in the medium stress situation, and in the severe stress situation. So in baseline, in normal situation, in medium stress situation, in severe stress situation, what will be the CRAR of the scheduled commercial bank for the March 2025? So the data points were given, that is, in the baseline scenario, the CRAR for the scheduled commercial bank would be 16.1%. The CRAR in the medium stress situation will be 14.4%, and in the severe stress situation, that if the country has the severe stress situation, then the CRAR for the scheduled commercial bank will be 13.0% in at the end of March 2025. Okay, and the macro stress test happened for 46 scheduled commercial banks. So this is the data point that is taken out from the macro stress test, that even in the severe stress situation, the scheduled commercial bank will be maintaining more than 11.5% of the CRAR. That is, CRAR, the minimum requirement is 9% plus 2.5%. Okay, so this is the CRAR requirement, that is 9% plus 2.5%. This is the capital conservation buffer. So in total, the minimum CRAR requirement or the minimum capital requirement by the RBI for the scheduled commercial bank is 11.5%. So even in the severe stress situation, it is expected that the banks are going to keep, the scheduled commercial banks are going to keep at least 13.0% of the CRAR at the end of March 2025. Okay, so this is as per the macro stress test that happened for 46 banks, 46 scheduled commercial bank. So here you can see the data points, and all these data points that are mentioned in the highlights, they are the most important data points. Okay, so do not forget about these data points. So this is the data point that I have completely explained in the detailed coverage. I hope you already know about it. So these are some of the important data that you need to remember from the exam point of view. Now coming to the next question, that is in the RBI Financial Stability Report June 2024, there is the data for the NBFCs. Okay, so try to think about it and try to tell me that which of the following statements are correct. So GNP ratio of the NBFCs continued its downward trajectory. That means the gross non-performing asset is decreasing for the NBFCs, and for the March 2024, the GNPA ratio was 4.0%. So that is correct. The capital position of NBFCs remained healthy. Their CRAR stood at 26.6% in March 2024. That not 16.6 but 26.6. Okay, it was 26.6. ROA, that is the return on asset for the NBFCs, was 3.3%. So that is correct. So first and third statements are actually correct. So here the answer is A, that is 1 and 3. So ROA ratio, you can see that the ROA was 3.3% for the NBFCs. The CRAR for the NBFCs stood at 26.6%. The GNP ratio of the NBFCs was 4.0%, and you can see that it has been a downward trajectory for the GNP ratio. The provisioning coverage ratio for the NBFCs is 72.1%. The NNPA ratio for the NBFCs is 1.1%. Okay, so these are some data points that are very important. Now here in the highlights, so this was the last point, that the NBFCs data was also given in the highlights of the FSR June 2024 by the Reserve Bank of India. So these were the important data points that were mentioned. That's why I have brought a question for you in regards to this statement, and you need to remember these data points. Okay, now coming to the next question, which of the following statements is or are incorrect in regards to primary urban cooperative banks in regards to the Financial Stability Report? The capital position of urban cooperative banks has been continuously improving in the post-pandemic period, with their CRAR increasing to 12.5%. So is it correct? Doesn't seem so. ROA ratio increased during 2023-24 and stood at 0.8%. So this is correct, that ROA ratio has increased during the 2023-24 and stood at 0.8% in March 2024, and GNP ratio decreased to 8.8% in March 2024. So that is correct, that for primary urban cooperative banks the GNP ratio has decreased. So you had to find the incorrect statement. Only the first statement is incorrect because the CRAR was 17.5% for the urban cooperative banks and not 12.5%. So only the first statement is wrong, the other statements are correct. Okay, so the CRAR ratio for the urban cooperative banks was 17.5% in March 2024. Their credit growth was 5.7% in March 2024. The CRAR for the urban cooperative banks in March 2024, as I've told you, it was 17.5%. The GNP ratio of the urban cooperative banks for March 2024 was 8.8%, and for the March 2024, the NNPA ratio was 2.8% for the primary urban cooperative banks. Their provisioning coverage ratio was 70.1% and their ROA was 0.8%. For the September 2023 March 2024, that is in a single financial year from the March 2023 from the till the March here, this was for the previous financial year, like after the previous financial year, you can see after the March 2024, this was the previous financial year. So after that you can see that there is the increase that has happened of the ROA. Okay, so both ROA and ROE ratios increased during the 2023-24. So that is in 2023-24, in this financial year, the ROA has increased as well as the ROE, that is the return on equity, has also increased. The ROA was 0.8% in March 2024. ROE was 7.9% in March 2024. Okay, so this is the financial year of 23-24 for which the ROA, you can see, is higher as compared to the previous year. Okay, so as per the IRDAI's mandate, in terms of solvency margin, the required value is what for the insurance companies? Solvency margin is the extra capital that the insurance companies must hold over and above the claim amounts they are likely to incur. So the solvency margin is 150% as per the IRDAI's mandate, that the insurance companies, they have to maintain 150% of the asset against the liability of 100. So that's why the solvency margin is 150%. So I hope this is clear, that the solvency ratio of the insurance company assess the ability of the insurer to meet its obligations towards the policy holders, that the insurance companies, they are able to meet their obligation towards the policy holders or not. This is assessed by the solvency ratio. Solvency ratio is 150%, that is, the higher the solvency ratio, the better will be the ability of the insurer, of the insurance companies, to meet their liabilities. So that's why it is kept 150%, that is, this is the minimum solvency margin that the insurance companies have to maintain. And as per the recent data, it has been seen that insurance companies are maintaining well above the solvency margin. So the minimum solvency ratio requirement set by the IRDAI for insurance companies in India is 150%, and the insurance companies data has been seen, and as per the data, the solvency ratio of the insurance companies is well above the 150% mark. Okay, so now the network analysis indicates that the total outstanding bilateral exposure between the financial institutions are expanding. So network analysis shows you that the relationship between the different financial institutions, it is increasing. The bilateral exposures between the different financial institutions is increasing, with Dash holding the largest share, that is, with scheduled commercial banks holding the largest share. And a stimulated contagion analysis shows that losses due to failure of 5 banks with the maximum capacity to cause contagion, that is, they have the maximum exposure with the other banking system, they would not lead to failure of any additional bank. That means if the top 5 banks that have the most exposure, that have the most connection with the other banks, if those top 5 banks that have the most relationship with the other banks, that have the most connection with the other banks, that have the most exposures with the other banks, if these top 5 banks are failing, the other banks will not fail. Okay, so this is the idea, and this is the important data point that you must know, that contagion analysis shows, a stimulated contagion analysis shows that the losses due to the failure of the 5 banks with the maximum capacity to cause contagion. That is, these are the top 5 banks that have the maximum connection with the other banks, that have the maximum exposure with the other banks. The failure of these 5 banks would not lead to the failure of any additional bank. So this is the idea. Okay, now coming to the next question, I hope you will be able to answer this question. So we have discussed most of the important data point in regards to the domestic economy. Now moving forward with the global economy, that the frantic expansion of global public debt has been seen in the recent year. As per the FSR June 2024, these worries are exacerbated by the elevated interest rates, that the interest rates are also high, the public debt is also increasing continuously. So which of the following is correct in regards to the public debt, that you have to tell me. Okay, so global public debt has increased to 93.2% of GDP by end 2023, 9 percentage points above its pre-pandemic level. So this seems correct, that yes, global public debt has increased to 93.2% of the GDP. The two largest economies in the world, that is US and China, they are the leading increase in the global debt. So that is correct. Alongside mounting public debt, there is the private debt that is also high, and total global debt stood at 239.9% of GDP. So that is also correct. So the first and third statements are correct, and that's why the correct answer is C. So the global public debt has increased to 93.2% of the GDP, of the global GDP, we can say, by the end of 2023. That is 9 percentage points higher than the pre-pandemic level. So this is correct. Here you can see that US and China, they are leading the increase in global debt. So that is problematic. Alongside this, you can see that the global debt in total, the global debt was 239.9% of the global GDP. Okay, so that is also a concerning point. So here global public debt has increased to 93.2% of GDP by end 2023, that is 9 percentage points above its pre-pandemic level. The two largest economies in the world, US and China, are leading the increase in global debt. So that is also a worrisome thing. The global debt stood at 239.9% of the GDP. So that is like 239.9%. So the total global debt is 239.9% of the global GDP. So that is huge. Okay, so now coming to the next question. So here remember the global fiscal deficit data also. So you can remember the global fiscal deficit data also and the primary deficit data also. Okay, so global fiscal deficit increased to 5.5% of the GDP, of the global GDP, and the primary deficit has lowered by 2 percentage points. What are the formulas of the gross fiscal deficit and the primary deficit? This we have discussed in detail in the detailed coverage session. Gross fiscal deficit is your total expenditure minus total receipts excluding borrowing, and primary deficit is equal to gross fiscal deficit minus your interest payments. Okay, so gross fiscal deficit has increased to 5.5% of the GDP on an average, and that is a rise of 1.6 percentage points from the previous year, and primary deficit has lowered by 2 percentage points. Okay, so now coming to next question. The global economy is facing heightened risk from the prolonged geopolitical tensions. As per the IMF, the world growth was at dash percentage in 2023. So very easy, it was 3.2% in 2023. Okay, so you have to remember these important data points. That is, it was 3.2%. As per IMF, the global growth was 3.2% in 2023. It is going to be 3.2% in 2024 and 3.2% in 2025. This is the forecast of the IMF, and the forecast of the World Bank is also given here. So now this is the homework question for you. I hope you will be easily able to answer this question. Do give me the right answer of the homework question, and do tell me that how many marks you have got out of 12. So we have done 12 questions. So do tell me that how many marks you have got out of 12. Okay, and do give the right answer of this homework question. Now before ending this session, I want to show you the blogs that have been prepared by our team very meticulously. So if you want to gain more understanding about the examination, you can go to the free material, you can go to the blog section, and here if you want to know more about the exam, let's say you want to know more about a particular exam, let's say RBI grade B, and if you want to know about the exam, you can get the information here, that is the exam analysis is provided, eligibility criteria, phase 1 syllabus, phase 2 syllabus, so that is provided here, as well as if you want to know the strategy for the examination, that also you can get from here, that how to prepare government schemes, how to prepare different components. If you want to know about the success story of a student, right, that how the student was able to achieve his or her dream, how the aspirant was able to achieve their dream, so you can read that from here also, that what strategy they followed. At the end of the page there is join our Telegram channel, so you can join the channel to get the PDF from the Telegram channel. So you will get the PDF of the sessions from the Telegram channel, so you can join from here. So this is regarding the blog, and that is free of cost. You can get more information about any of the examination through the blogs, that is very meticulously prepared. Okay, if you want to know about the courses for the RBI grade B or NABARD grade A or any of the courses, if you want to know, so you can get the information regarding the courses from here. You can see that what off is going on. So if you want to know more about the courses, you can go to the courses section to know more about it. So this is it. So I hope you were able to get 12 out of 12, or at least more than 10 marks you were able to get. So do tell me that how many marks you have got and what mistakes you have made. So do recognize your mistakes, because that is the most important thing, that what mistake you are doing, you do not remember the data, revise. If you have misread the question, you have to practice a lot of questions so that you do not do such kind of mistakes, and these mistakes you have to rectify so that in the examination you do not make such mistakes, right? So do tell me how many marks you have got and what mistake you did if your marks is not 12 out of 12. So thank you everyone, have a good day, have a great day.